there's an irony in being here to talk about crypto policy abroad. We're obviously sitting here in DC, which is stuck in gridlock when it comes to policy. So I'm excited to actually talk about different jurisdictions that are moving forward with crypto regulation, whether it's passing it, approving it, or actually implementing it. And we have a great combination here of both a regulator who's working on this, as well as representatives from two companies who can talk about how they're thinking about crypto policy abroad. So Christos, I want to start with you, and I know you're limited in what you can say, so hopefully you can jump in with some other questions as well. But Bermuda is a really interesting case because obviously you're seeing it become a favorite of different US companies, including Circle and Coinbase, who are getting licenses there. So I want to start off if you can give an overview of how Bermuda thinks about crypto regulation.
Of course. So good afternoon, everyone. It's my pleasure and honor to participate in this panel session. I am an assistant director in the FinTech department of Bermuda Monetary Authority. So before explaining the framework, just to let you know that Bermuda Monetary Authority, or BMA, is the single financial services regulator in Bermuda. So we supervise the entire spectrum of financial services, banks, insurance, fintechs. When it comes to the digital asset framework, there are two different frameworks in Bermuda. What is called the Digital Asset Issuance Act, or DIA. So I'm going to be mentioning some acronyms there. It's the framework that essentially regulates ICOs, what are usually known, and it's a disclosures-based regime. The other framework that I'm going to be focusing on is what we call the Digital Asset Business Act, or DABA, which came into force in 2018. So it has been implemented for 5 years now. And it regulates digital asset businesses, or what are known as CASPs or VASPs across the world. When it comes to the activities, it encompasses any type of activity, intermediary financial activity in relation to digital assets. So custody, exchange, broker-dealer, we have asset managers, stablecoin issuers, and it is future-proofed, both from an activity standpoint as well as a product standpoint. And I would like to make it clear. From an activity standpoint, we have a specific category which is called Digital Asset Services Vendor, which essentially captures any type of intermediation in relation to digital assets. This means that if we see an emerging trend, an emerging business activity, business model, which does not clearly fall within explicit definition under digital asset business activity, it would still be captured. And we have seen certain use cases. So for example, in relation to lending and borrowing, initially it was captured under that definition. Therefore, it fell within the purview of the framework. And then it was introduced as an explicit activity. From a product standpoint, a digital asset, unlike other jurisdictions, again, it encompasses every type of product which is issued on a DLT, which means that be it a tokenized equity, be it traditional crypto, how we are understanding it, a stablecoin, an NFT, it would still be a digital asset. So insofar as an activity, which is future-proofed in this regard, is provided in relation to a digital asset, it would fall within the purview of the Digital Asset Business Act of DABA. So it is a regime, a prudential, full-fledged regime. There are three pillars of regulation. There is the prudential, there is the AML, ATF requirements, plus the cyber risk. So it is a fully fledged framework. There are 3 different license classes under the framework. 2 of them are sandbox license classes. The first one is what is known as Class T, or testing, which is meant for pilot or beta testing of a concept, a proof of concept, in relation to an innovative business model. Typically, it's for anything between 3 to 6 months, so that we have an opportunity to test it, to identify the risks associated with a business model, and then we can then proceed to the second type of license class, which is what is called as Class M, or modified. This is meant for scale-ups, for businesses that want to scale their operations, who have identified their risks, who know what their business model entails, and then there is this kind of ongoing conversational relationship to help them mitigate those risks. For developing risk management, compliance, policies and procedures, corporate governance on the AML, ATF standpoint, on the cyber risk standpoint. And then we have the third type of license class, which is essentially what is called as Class F, the full license. Having said that, because a sandbox, at the end of the day, is a controlled environment. There have been instances where we have actually sandboxed a product. So there have been instances where we have a mature entity introducing a novel product, and they want to understand the mitigate risks associated with this novel product. So there have been instances where, under a Class F, the auspices of a Class F license, we have introduced some kind of a sandbox environment with increased supervision and very, very close relationship. So this is, in a nutshell, the overview of the DABA framework in Bermuda.
Yeah, thanks for the overview. And I mean, I think the idea of future-proofing is something that comes up a lot when different jurisdictions are thinking about regulation, because obviously this is a technology that's moving very quickly with a lot of innovation. I know Deputy Secretary Adiyamo talked about that yesterday when it comes to how Treasury is approaching that. So Seth, I want to move on to you. I know you spend a lot of time in France. Obviously, Ledger is based in France, working in the new framework that the EU has passed, which is MiCA. And I think MiCA is often presented as this huge step forward, one of the major economic powers in the world actually enacting crypto regulation. So I'm curious how you're thinking about MiCA and whether you do think it's a model that the US should try to emulate.
Yeah, thank you for that. It's a great question. I get asked that a lot, and I think I tend to have a contrarian view. MiCA, for all intents and purposes, was finalized about 1.5 years ago. It's not exactly new, and yet we can't stop talking about it. Why is that? I think that's because as Americans, we fundamentally misunderstand the European approach to regulation, and we tend to romanticize the idea of MiCA into something that it's not. We say, we look sort of longingly across the Atlantic and say, Europe has regulatory clarity. Wouldn't that be great? And it would, except that MiCA isn't an end, it's a beginning. It's the tip of a very nasty iceberg that is only growing. And before I get into some of the problems with it, I do want to take a moment to recognize a couple things that MiCA got right. First of all, I think MiCA is directionally correct in that at least the final version of it focuses most of its attention on the centralized aspects of the marketplace. So things like centralized exchanges, reserve-backed stablecoins, new token issuances. Those are the areas that are the most ripe for regulation. I think the other thing that the EU did with MiCA that was really smart is MiCA recognizes utility tokens as a new, distinct type of instrument. Right? They resisted the temptation to just shove it into some pre-existing category. That's really smart. That is something that we should try to do here. The problem with the European approach to regulation, sort of in general, but also as we've seen in digital assets, is simply that they never stop regulating. So MiCA is a couple of hundred pages. MiCA is what they call a level 1 legislation, right? It's the base text. As we speak, the European supervisory agencies are hard at work drafting what are called the level 2 text, the equivalent of our sort of agency rulemakings. Those will add another 500 or 600 pages. And before MiCA was even finalized, the European Commission and the ECB had already started calling for MiCA 2, which would be a new level 1, which would have its own level 2. And so just MiCA by itself, by the time it's all said and done, will be well in excess of 1,000 pages of regulation. But MiCA is the center of a constellation of bills that affect digital assets in varying ways, that include, but are not limited to, the transfer of funds regulation, the anti-money laundering regulation, the Anti-Money Laundering Authority, Anti-Money Laundering Directive number 6, the Digital Operational Resilience Act, Cyber Resilience Act, the DLT pilot regime, the Retail Investment Standards, E-Money Directive, Payment Services Directive, Data Act, and the Directive on Administrative Cooperation number 8, to name a few. And those are all level 1s that have their own level 2s. So if you're a crypto startup in Europe, you get absolutely buried under an avalanche of regulation that drives up your cost of compliance, drives up your operational complexity, drives up barriers to entry, and on the whole makes you less competitive than your peers in the US or Asia. That is not a winning formula. That is not something that we should seek to emulate here, as much as we would like to have certainty.
So, Rob, I want to bring you into this, and I know you joined the crypto industry recently, so I hope you've been enjoying your time here so far. I think there's probably no company more emblematic of tussling with regulators than Ripple, and I know Ripple has been making a big push abroad, including in Europe. So I'm curious from your standpoint, when you think about new jurisdictions to expand into, what are you actually looking at? And maybe you can start with Europe and share your view on what's happening with the EU.
Sure. Well, thank you for having me here, Leo, and the Blockchain Association. This has been a really interesting 2 days. Every time I come to one of these in my first 6 months, I'm learning more and more and meeting some wonderful people. At Ripple, I would say, our history of tussling with regulators is not because we're anti-regulator or anti-regulation. We actually believe regulation is a good thing, is needed. It can be a validating and legitimizing force for the industry as well as for the players within it. Some of what has come our direction has not been at our request, let's put it that way. But when I go around the world and I represent Ripple, some of the things that we're looking at, and we're a very global company, we have a footprint in 4 or 5 continents, of which I've been to in the last 6 months. And we've had really productive conversations. And a lot about what we are engaging with is about respect. Respect for understanding what the regulators on the other side are trying to accomplish, as well as their respect for what the industry is and its validness and its utility, whether it's financial institutions who we serve or consumers. And so some of the things that we look at and promote and talk a lot about are developing a global taxonomy. In the EU, for instance, in the UK, you see definitions of things like payment tokens, utility tokens, security tokens. Right, that's one thing that I wish that we had a little bit more of a discussion here in the United States. You look at the FIT21 Act, which a lot of discussion has been on. Everything from Pepe the Frog to Bitcoin to XRP is kind of lumped in together, and there are very different uses and utilities for those tokens. So I believe a lot of the jurisdictions globally have taken that approach where they define it by kind of what is a token's utility, what's its function. Secondly, I think what we also look at is, to the extent they have a principles-based approach. Is it flexible? There's been a lot of talk about innovation in the industry, right? Some of the things that have been concerning and talked about, say, with what Deputy Secretary said yesterday is this, and Hester and Commissioner Peirce brought this up, is this technology focused, right? We really should be looking at technology neutral type of regulations and looking at what is the principle we're trying to achieve here, right? And then applying what a lot of people say, same activity, same risk, right? Type of approach to it. I think we see this in Bermuda, right? And so those are kind of 3 things, and then we love sandboxes. I love the fact you mentioned sandboxes. I tend to look at, and hopefully, and I'm always an optimist, and people who know me know this, part of what we're seeing play out in the United States is with the state legislation is a little bit of a sandbox approach. But in a lot of regulatory jurisdictions across the world, whether it's Singapore or Hong Kong, Thailand, in areas in Asia Pacific, as well as some of the areas that we're seeing with, in Brazil and others, there is a sandbox approach. And I think that's very helpful, provided there's an exit, and you mentioned this, provided you can go from the sandbox to an exit to a full-fledged kind of service. So those are the things that we take into account, but a lot of it is fundamental. It's respect for what the country's regulators have to do, and then their respect for kind of the businesses that we want to run and the services we want to provide.
So yesterday we heard Deputy Secretary Adeyemo speak, and I think a talking point in crypto you frequently hear is that a lack of regulation in the U.S. will push companies offshores. He had a contrarian view to that. He said, the U.S. economy is strong enough that no matter what, companies will always have a touch point here. But it seems like for both your companies, that's a clear example of maybe the lack of regulation pushing companies offshore, at least causing to explore other options. Bermuda obviously has enjoyed that, seeing some companies come to Bermuda to look for licenses. So I'm curious what your response to him would be, or to that talking point that regulators shouldn't necessarily worry about what happens in this vacuum if companies are moving offshore.
Yeah, I think from our end, we're a perfect example. I mean, we're a U.S. company with U.S. founders. But lately, since the litigation was brought against us, our growth has been 80% outside the United States in terms of headcount. We've opened office after office with investment, with developers then moving there to work on different aspects of what Ripple is doing, as well as what the XRP ledger is doing. And you see that. That's economic investment. That's hiring. That's all the things that some of the congressmen talked about here that they want to see, right? And we're taking that offshore, not by our own choice. I do agree to a certain extent with the Deputy Secretary. Look, the United States is an enormous market. You're not going to ignore that market. But to the extent that you want to bring folks into the regulatory perimeter, I fundamentally believe that is better for every jurisdiction to bring things in their perimeter than push them offshore. And so to the extent that Ripple wants to be engaged in the United States, we are. But to the extent the United States doesn't want to engage back, there are other places to go. The world is a big, beautiful place full of opportunity, and we're taking advantage of that. And in a sense, it's been a little bit of a blessing. We've been forced to do that perhaps earlier than we would have done in our natural progression because of the attitudes in the United States.
Yeah, I agree with Rob on a lot of those points. Ledger, of course, is a French company, and so we've always been outside the U.S., but the U.S. has always been our largest sales market, and so of course it matters. And I think to that extent, the Deputy Secretary's remarks are true. It's hard to just completely ignore the U.S. But while it's a very important market for us, and I think as we thought about our future progression as a company, provided that we continued to be successful, I think it was always just assumed that at one point, if we were sort of mature enough to think about an IPO, for example, of course it would have been in New York. You wouldn't even think about it anywhere else. Given the way that things have gone the last couple of years, I'm not sure that we could say that anymore. And so I think people do look around the world at different options in different places. You don't just assume that you're always going to be in the U.S. because of the way the government has largely acted toward this industry. And to your point, Rob, there are lots of other places you can go. I was just in the UAE a couple weeks ago, and it is absolutely booming. I mean, the buzz of this industry in particular in the UAE is undeniable. And the regulators and the government there is extremely welcoming. They're very accommodative. That's not to say that there's no regulation. In fact, quite the opposite. They were some of the first. The Abu Dhabi Global Market unveiled one of the earliest comprehensive regulatory frameworks for digital assets in 2018. So there are rules there, and they're clear rules, but they were designed specifically with digital assets in mind. They didn't come at it from sort of a legacy, regulatory structure, as we see in sort of more mature markets. And there's a genuine motivation there to diversify the economy into industries of the future. Right? They want us there. They want people there. And honestly, it's kind of refreshing to talk to regulators and government officials there that see the value, that don't have to be convinced, that don't call us all flat earthers, for example. It's very nice.
I think there's also a flip side to that, which is you've seen some jurisdictions get burned by enacting crypto regulation, and the Bahamas is a good example of that, where FTX came there a couple years after they passed their wide-ranging regulation. They actually had a big conference a couple weeks ago during the SBF trial to say, we're still open for business. I think there was some irony there, but it'd be interesting to see if they actually regret their decision to do that. And I'm curious for both of you, when you have conversations with different lawmakers or regulators abroad, obviously this is an industry that's had a tough couple years, and countries may not want to invite companies in. So how do you try to deal with those concerns?
Yeah, I mean, I'll use Singapore for an instance, right? They have been developing regulations around this industry for a long time. They have one of the more, mature regulations. We recently received one of their licenses for a major payments institution license down there. But they had a real effect from the FTX fallout, right? Temasek, which is part of their sovereign wealth fund, was lost quite a few dollars in that situation, but that didn't make them retract from engagement, right? I think there's an understanding that, you know, what happened with, particularly with SBF is fraud, right? That's not crypto, that's fraud. And so, and there's a sense that, you know, the industry and the technology has more utility than just one person or a cult of personality, right? I think, you know, there's a lot of that, at least, you know, I'm new, you know, I wasn't here during the heyday of SBF. But there's a lot of sense of like, let's move on from the cult of personality. Let the technology stand for itself, right? I mean, there's so many things that we are doing with this technology that are happening right now, different use cases, different ways of allowing people to access, you know, new forms of equity and wealth and investment that I think is mature markets understand that despite the ups and downs, there's still tremendous value in this. And I think, you know, my experience has been people understand generally that one person doesn't define an industry or one set of actors doesn't define an industry, and that actually, you know, this is a process that is going to be helpful to clear up and clear out that and move forward with what is a technology that is bringing utility and benefits to people. And so that's the discussion I tend to have, which is, I think, a very productive one.
So I was actually at that conference in the Bahamas. They asked me to come down and speak, and it was interesting. I mean, it was the first thing that they'd done, you know, obviously since all of the FTX stuff unraveled. And one of the things that surprised me about it was how many government officials were there. I mean, they were there supporting the conference, they were there supporting the industry, and they were sending a very clear message of, you know, we're still here, we still have, you know, one of the more comprehensive regulatory frameworks in the world. We're still relevant, and we still want you. There was an undeniable awkwardness, just given, you know, the timing and the circumstances. And I thought about, you know, why that would be, like why after, you know, all the egg on their face, they would sort of come back and say, you know, we're still in this. And I think where I landed on it is that prior to crypto and digital assets, there's no way that some of these smaller jurisdictions could ever hope to you know, dethrone New York or London or Hong Kong as financial centers. But crypto you know, is a disruptive technology in a lot of ways, and it's provided opportunities for some of these jurisdictions like Abu Dhabi, like the Bahamas, like Bermuda, to leapfrog some of these, you know, historical powerhouse, you know, market centers, just by doing what you've done, by creating a sensible regulatory framework for digital assets, and you know, truly partnering with the industry instead of just saying that you're doing that and then not.
So I think you keep hearing the same names of countries or jurisdictions who are at least making progress, if not getting it entirely right. You know, the EU, the UAE, Singapore. I'm curious, and Bermuda, of course. I'm curious of other jurisdictions you think that people should be looking to or are doing interesting work that maybe the US could look to as a model.
Sure. I mean, I think Brazil is one. Brazil recently passed legislation and is about to go into their regulatory process to define a little bit more what the rules of the road will be there. I think also if you look in Latin America as well, you'll see Chile has a new FinTech law that is kind of grasping its arms around this technology right now. Peru is having a debate down there. So there's a lot of action going on in Latin America. Obviously, we've got, you know, Mexico's having a discussion around this issue. This morning I was telling you, we finalized a submission on a consultation in Australia as they look forward to regulating. We know New Zealand has the same kind of prospects in mind for perhaps for 2024. You know, and then we've got other parts of the global south in India and jurisdictions in Africa that are starting to approach this as well. So what's amazing is how much activity and how much forward progress is being made around the world on continent after continent and country after country, and the maturity of those discussions, particularly when you compare it to what's happening here in the United States. I think the reception you got in Dubai and UAE is something similar that I've received But I've seen that all over the world in the last 6 months. I've been in 24 different countries, and that is reciprocated in place after place as they recognize they have a chance to be leaders, a chance to develop a new ecosystem, and a chance to broaden for their populace new ways to access these types of services.
Cool. I think that's all the time we have here today. Thank you all for joining me. Hopefully see you in Bermuda soon.
Yeah, let's meet up there.
We'd love to.
Welcome.
Thank you all.
Thank you very much.